Hello again, everyone. Welcome back. In this technical analysis of the stock market video, I titled it, "It Could Get Ugly," because I think that's exactly what could happen here in the near future. And I'll talk about that with the S&P 500 in a minute. I want to review quickly what has happened with some of the earnings reports that have come out, the previous week and then this last week. Amazon, Google, Disney, Uber. And then we'll dive in, take a look at the SPX. I'm going to look at the put to call ratio, the equity put to call ratios, and how I think that has had some interesting timing aspects. And then we're going to look at gold and silver. All right, so Amazon. On the screen here, you can see Amazon had their earnings come out the evening of February 3rd. Now, this big drop was because of Facebook. Then their earnings come out and they had this big move up here. And here we are with the close on Friday, closing 6.4% below the high that was achieved 3 days later after the earnings report. Okay, so maybe the fourth day, I guess, after earnings release. But here we are sitting below where the came not only the next day close, but the high, down 6.4%. So you look at it and bulls would say, well, that's not too bad. Well, now let's take a look at Google, Alphabet, which is reflected in this picture right here, down 11.4%. Earnings came out after the market on February 1st. And here we are with the very next day. And here's the not all-time high, it may be the all-time high actually. The high that was achieved post-earnings of 30.93. And then where did we close on Friday? 2685.65. Okay, right here. 2685.65, down 11.4% from that post-earnings high. Okay. So that was the prior week. And what is impacting all of this? Well, it's the overall picture that's happening, but it's this. S&P 500 real earnings yield continues to plunge, now at minus 3.2%, an all-time low. And real earnings yield, because they're accounting for inflation. And it's this inflation that's come out. We've talked, of course, it's hitting the headlines. Everybody's seeing it. The CPI, highest since 1982, and it was a fresh new 40-year high. Well, back in 1982, February 1982, the federal funds rate was 15%. Where are we sitting now? 0.25%, 0 to 0.25%. Talk about being behind the curve. I mean, it's just actually pretty ridiculous. So let's look at a couple earnings that came out this last week. Here's Disney. It's only been 2 days, but down 5.2% at the close on Friday from the post-earnings high. All of these stocks had earnings beats. Everybody was raving about Disney, okay? And then look what's happened here. Uber, an earnings beat. And here's what they talked about. Let me see if I can find it. Hold on a second. Here we go, right here. Uber beats on revenue, says core business is bouncing back after Omicron surge. Stock was up more than 6% in after-hours trading. Okay, that was on CNBC. So here we go. So earnings came out right here and up more than 6% in after hours trading, carried over to the next morning, opened here, surged, and then collapsed. Down 17.1% from a post-earnings high to the close here at $35.29. Pretty incredible move to the downside here with Uber. So those are earnings pictures that have happened. We talked about what's affecting these outlooks with the stocks. Now let's take a look at the S&P 500. Okay, here you go. Here's the daily view. Here's the weekly view. It was down 85.44 on Friday, down 81.89 for the week. Now, let's take a look at this. And I'm going to go, this is just what I call my moving average views, kind of my more pure technical versus the Elliott Wave. So here's what I want to point out. These readings right here, equity put to call readings, January 3rd, January 11th, and February 9th. Now, here's what I do with on these readings. Here's the individual day readings. Here's the 10-day moving average. When I get a reading below 0.45, so what is that? Like right here, 0.42, this reading on the 3rd. 42 puts for every 100 calls. When it gets below 0.45, I color it dark red. When it gets into the 30s, I color it purple. So this shows kind of when you have a very low put buying, it shows a reading of sentiment, of bullish sentiment. Notice how that reading occurred right here, one day before the intraday peak on January 4th on the S&P 500. Well, then, we sell off for a few days. Then we get another peak right here on January 11th with a 0.43 reading on January 11th. The very next day, the little rally peak high on the 12th. Then we get this intensive sell-off, and here's the low on January 24th. And you could see the day before that sell-off, we got kind of an extreme put buying reading, one-day reading. That's not super extreme by any means, but it was extreme relative to what we've been experiencing. Let's put it that way. So then here we go, getting in our rally coming back up here. Where do we get another reading below 0.45? Right here on February 9th. And I remember I showed this to my members during the week last week, and I said, well, I really thought maybe we'd get one or two more, days where we kind of punch to an intraday high. And I don't think we even got that the next day. The high, 4590.03, the high, 4588.92. So we never even took out Wednesday's high, and they just slammed it Thursday and Friday. Okay, so pretty interesting timing with the equity put to call ratios in here. So what am I watching now? I'm watching for some extreme put buying readings along with the wave count that we've got in here. So what is the wave count that we've got? This is the daily view on the S&P 500. Let me pull over and show you where we're at with the 130-minute chart. So the interesting thing here with the daily, we had wave one down, wave two back up now with that rally that we just talked about, and now we're heading south. And over here on the 130-minute, it gives you a better picture for what we're talking about. I believe we had wave one, wave two, an expanded flat in here, and then wave three, small wave four, and then we hit wave five very strong with the move down. You can see how deeply oversold we got. And then here's the pullback that happened. We came back very close into the prior wave four, and then we just got very complex. This was really a double zigzag in here. Thought we were just going to get a single zigzag for the wave, and then when this developed, this really turned into a double zigzag. Now, Y did not go beyond the end of W. It doesn't have to. It's not a rule, okay? Normally, you would look in a zigzag, you look for the C wave to be equal to the A wave. Many times it stretches beyond it, but it doesn't have, there's no rule that said it has to be equal. So, by the wave structure that we've got in here, I believe this is done. And the way we've come back, we broke this trend line. The other thing I was looking at and I was watching is, I can't do it because it put it right where I want to code it. This area right here, you could sit back and say, well, maybe this is a wave one, wave two, wave three. Could we have been doing a wave four? Well, now with the move down that we just got, we just overlapped, a potential previous wave one if we were looking at an alternate type count. So I have a lot of confidence right now in the fact that I believe this third minute wave down is underway. And so when I look at it and I say, well, it could get ugly, here's what I'm watching. We get a close below that January 24th low, which is also the low on the Dow Industrials and on the NASDAQ Composite. We get a close below that low, it could get real ugly. And I don't know whether we're 1 day away or 6 days away, but I've got my eye on that low for sure, because we're going to be in a third wave and we close below that low. Watch out. All right, let's take a look. I think that's all I wanted to say and talk about on the S&P right now. Let's take a look at gold and silver. Okay, we're going to start off here with gold first. So we finally broke above this trend line, and I believe we have a big triangle compression going on in here. And you know, this triangle, it fits to me as a wave 4, and that would tell me we have another cycle wave 5 coming and developing. We've been waiting on it forever, it seems like. But finally getting this close above this is very, very good. And what I'm really looking for is to move above this high, this D, this wave high right here, which is 174.67. This is the Spider Gold Trust ETF GLD. All right, so the thing that's confusing though, when I looked at the daily, it took me a while to figure this out, and I thought, what is going on? Because of this zigzaggy, the overlap, this is what I think is happening. I think we had a leading diagonal pattern in here for wave 1, okay? Then we have this expanded flat for wave 2. A, B, a strong pullback here for wave C, and now I think we're off and running in a wave 3. So we'll see what kind of, you know, a wave 3 should be a strong, nice, impulsive wave. It was really interesting that we got this kind of a move really on what I would call a fear trade or a fear move of some kind because of what happened, you know, with the whole thing with Ukraine on Friday afternoon. But it could also be a carryover from the inflation, you know, because we could have had just a delay. You know, here was Thursday's, you know, post-inflation release, and then all of a sudden here we've got it, you know, kicking in on Friday. So I think it's a combo that's happening in here and finally kicking in on gold, and the same thing is happening on silver. But I'll tell you, the move in here is a little bit confusing. It could be the very same thing though. It could be wave 1 and then an A, B, C. You know, it's a pretty big B move, but it's the only thing that makes sense to me, especially when you have a move that comes back down here and takes out this low. Now, I'm going to need to see this continue to push higher, take out this high right here at 22.84, break this trend line, and be off and running. It's not the same kind of picture to me that what we've got with gold, with GLD, but it does look like a sideways pattern in here. And my best take on this is that we are really doing, you know, a W, X, Y, X. Actually, this should be Z. Well, hold on a minute. Yeah, now I've got it correct. W, X, Y, X, Z, triple combination. So very complex sideways type move here for wave 2. This is not at all what I would be expecting for a wave 2. Not at all what I'd be expecting for a wave 2, but it is what it is. And so now we'll watch and see, do we get some kind of major breakout of this whole sideways type move and we break this trend line and move to the upside. So let's take a look at the daily. Let's go back over here. And here's what I'm looking at. Okay, that's it for today. If you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to this channel, hit that little subscriber button. And if you'd like more of this kind of information on a regular basis, head on over to joehenches.net. Check out the website, check out the membership, and I'll talk to you on the next video. Everyone have a great week.